A lot of baby boomers are expected to get back into the real estate market in the next 5 years as they move to downsize. The Royal LePage Boomer Trends Survey, which was released today, found that more than 1.4 million boomers, meaning those born between 1946 and 1964, will be purchasing real estate between now and 2023. But the research indicates that smaller cities and recreational areas will attract more investment than major cities. Phil Soper is the president and CEO of Royal LePage. He joins me now from our studio in Toronto. Good morning.
Good to be here.
Thanks for being with us. So my first thought when I heard the headline was, aren't baby boomers already in the housing market?
Well, you know, they're in houses in great numbers, like over 80%, but they're not trading in real estate. What people tend to do is trade a lot when they're young. They're single plays, the couple plays, the kid plays. And then when they stop having kids, they tend to settle down and there's a lot less movement. We actually expected them to be on the move, say, 5 or 7 years ago based on previous generations, but the kids didn't leave home. So they have been stuck in place, and they're finally getting kicked out of the nest or flying off on their own. And as a result, there's a bit of a movement away from the large family homes.
So where are these boomers planning on going, and what are they buying?
Yeah, their homes are in what you call places that are good for working and good for raising kids, but not necessarily good for empty nesters who are retired or semi-retired. So they've looked at them, and 63% in the GTA, 59% nationally said the neighborhood I live in is unaffordable. So they're moving to more affordable neighborhoods, suburbs, recreational areas, and smaller towns.
So you noticed some trends, house versus condo, and what are you seeing there?
Well, the overwhelming majority of baby boomers live in detached homes. It's about 2/3 of them, and then the rest are split between condos and townhouses. Much different than today's home buyer, which have swung towards condominiums in much larger numbers as our cities get bigger and they're just more efficient. A lot more variety in condominiums than there were, say, 20 or 30 years ago as well. So they're in detached homes today. Most of them still feel like they'd like to live in a detached home, but when you look at their actual plans, condominiums are going to be the target residence, and probably larger condominiums. We sometimes call them luxury condominiums, but they don't necessarily have to be luxury, but they're not the micro condos you find down by the Air Canada Centre in Toronto, for example.
So what does this mean then for the housing market overall, potentially having all these vacant detached homes?
I think we've got a housing crisis in Canada in our bigger cities, particularly in BC and Ontario, and increasingly in the Greater Montreal area, which has really been on fire in recent years. And there's many more people looking for homes than we have homes available. So hopefully this will provide a little bit of a relief valve as these 1.4 million people potentially vacate some of the space that are good for working, good for raising families, and provide an opening for the legions of Gen Xers and millennials who are raising families.
Go down?
Well, and the price increases we've seen in detached homes over the last decade should mitigate somewhat. But, you know, if you push one place, it pops up another. We're probably going to see upward pressure on larger condominiums.
Okay. It's always so interesting. Phil Soper, he's the president and CEO of Royal LePage. Phil, thanks so much for being with us.